Good morning, everybody. Mike Vacchi from Princetontrader.com here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, daily chart of the ES, and I apologize I wasn't on yesterday, but I know I don't sound real good today. Yesterday I had no voice at all, so let's try this. Daily chart of the ES, we saw these Bollinger Bands get incredibly tight last week, and it broke above. And typically you will see a move run much farther than it normally would. But in my opinion, what you had happen here was it ran too far too fast. The bands were so tight that the initial move got way outside of the 2 standard deviation bands and immediately got involved with the 3 standard deviation bands, which, as I mentioned last week, is simply not sustainable. That kind of imploded under its own weight, and we had a big down day Monday. Bulls came back Tuesday, took that middle Bollinger Band back, but what we saw yesterday was very unique, at least with respect to this rally. You saw the bears come back and retake the middle band on the following day. Okay, that's only happened once or twice. It happened here, but that was non-farm payroll day, so that's not necessarily the best example of bearish follow-through. Yesterday, on the other hand, had no major catalyst whatsoever. So what we have to see today is, can the bears keep price underneath the middle band? Can they keep it underneath the middle band? If they can, then the door is open to 1533. The break of 1540 yesterday opened up the 1533 level on my charts. One of two things happens at 1533. We break it or we hold it. If we hold it at 1533, again, is that non-farm payroll low. If we hold the 33, then I think you'll see a lot of, I think 33 will initially hold. I think it's a good fade level. On the retest, we've really got high noon, because the dip buyers have to decide if they want that as a double bottom to run back up to 93, or the bears decide this is our chance, we're going to push this thing down below 33. If 33 converts to the downside and becomes resistance, then the door is open to 1510. 1510, 1510. If 33 holds, that will open the door back up to the middle Bollinger Band up around 1559, 1560. So 1533 is big. 1533, and what happens on 1533 is going to produce a big trade, either from the long side or the short side. It's our job as traders to observe, wait for the setup, and then react. With respect to the pivots, we have double pivots today, 9-day and 20-day pivots up at 1557 even. You got the 3-day just underneath. So middle band up at 50, 58, 59. Double pivots underneath 57, 3-day at 55 quarter, daily at 50.75. So there's a lot of wood to chop from the upside. And you're starting to see a shift, at least with respect to the pivots, into a down market, meaning that the daily pivot is underneath the 3-day pivot, which is underneath the 9-day pivot, which is underneath the 20-day pivot. Think of it as rungs of a ladder. Now, the 45 is still underneath price at 1539 and provided a nice opportunity for support yesterday. We're a long way away after this kind of a ramp into seeing the 45-day pivot become the highest pivot on the board. But just when you think it can't happen, we're up on 93s. Nobody wants to sell the 93s. Everybody's looking for numbers in the 1600s, even though we're on the 3rd standard deviation Bollinger Band. And, next thing you know, we're down on 1543. Those Bollinger Bands are important. 3rd standard deviation Bollinger Bands are not sustainable. And if you take anything away from this, take that. That this pinch, you got your move higher, ran too fast, not sustainable, got to give some back. The question now is, the bears may want to keep it when they haven't wanted that before. Okay, everybody have a fantastic day. Mike Vacchi for Princetontrader.com, for ntmarkets.com. I will be back tomorrow morning with another webcast. Trade them well, everybody.